Welcome to the official audio-video overview for the proposed initial public offering IPO of Euro Prateek Sales Limited. Our company operates in the decorative wall panel and decorative laminates industry as a prominent seller and marketer of decorative wall panels and decorative laminates. Caution: investors are advised not to rely on any other document, content or information provided in respect to the IPO on the internet, online websites, social media platforms, microblogging platforms by finfluencers. Investors are advised to rely only on the information contained in the offer document and price band advertisement for making investment decision. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead managers, BRLMs and the company that you are the intended recipient of this video and you are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. Investors are advised to read the draft red herring prospectus dated January 20, 2025, DRHP. Euro Prateek Sales Limited's IPO consists of an offer for sale of up to such number of equity shares, aggregating up to 7,300 million rupees with an employee reservation portion. The offer for sale involves the sale of equity shares held by Prateek Gunwantraj Singhvi, Jai Gunwantraj Singhvi, Prateek Gunwantraj Singhvi HUF, Jai Gunwantraj Singhvi HUF, the promoters selling shareholders, and Dipti Prateek Singhvi and Nisha Jai Singhvi, the promoter group selling shareholders, and together with the promoter selling shareholders, the selling shareholders in the IPO, and proceeds of the offer will not be received by the company. Incorporated on January 19, 2010, with its registered and corporate office in Mumbai, Maharashtra. We offer a quality and eco-friendly alternative to traditional wall decoration products such as wallpaper, wood and paint. According to the Technopak report, our range of products competes with wallpaper products and premium wall paints in the Indian market by offering a durable and cost-effective product range. Our products are antibacterial, antifungal, free from certain heavy metals such as lead and mercury, and are made from recycled and eco-friendly materials, offering greater environment consciousness than the substitutes in the Indian market such as wood and paint products. The Technopak report has been exclusively commissioned and paid for by our company for the purpose of understanding the industry in connection with this offer. As per the Technopak report, we are one of India's leading decorative wall panel brands and have established ourselves as one of the largest organized wall panel brands, with a market share of 15.87% by revenue in the organized decorative wall panels industry. And our total revenue from the decorative wall panels sold during fiscal 2023 was 1,742.89 million rupees. According to the Technopak report, the decorative wall panels and decorative laminates industries are valued at 24,180.18 million rupees and 94,931.20 million rupees in fiscal 2024 respectively, and are expected to expand at a CAGR of 17.89% from fiscal 2024 to fiscal 2029, reaching a value of 55,068.18 million rupees by fiscal 2029 and 9.00% from fiscal 2024 to fiscal 2029, reaching a value of 146,063.42 million rupees by fiscal 2029 respectively. As an asset-light company, we have set up a contract manufacturing model for manufacturing our products. During the 6-month period ended September 30, 2024, we worked with 26 contract manufacturers in India and abroad. Once our manufacturing partners receive our design templates, they produce the finished products in compliance with our specifications and quality standards. Our warehouses spread across approximately 143,774 square feet in Bhiwandi, Maharashtra, aid the stability of our operations. Our warehouses are located near the Nhava Sheva port in Mumbai, which helps us with delivery of our products to our distributors. Investors should note the following important risks. We are significantly dependent on our contract manufacturers for manufacturing of our products. In the 6-month period ended September 30, 2024 and in fiscals 2024, 2023 and 2022, 32.08%, 70.56%, 56.18%, and 46.05% respectively of our total value of products purchased were manufactured by our top contract manufacturer, and 47.95%, 91.66%, 87.88%, and 86.02% respectively of our total value of products purchased were manufactured by our top 10 contract manufacturers. Any loss of our contract manufacturers, if not suitably replaced, could materially and adversely affect our business, results of operations, and financial condition. We do not operate any manufacturing facilities, and our dependence on contract manufacturers for all our products subjects us to risks which, if realized, could materially and adversely affect our business, results of operations, and financial condition. We depend significantly on revenue from sale of decorative wall panels, which contributed to 68.97%, 76.54%, 66.12%, and 54.97% of our revenue from operations for the 6-month period ended September 30, 2024, and in fiscals 2024, 2023, and 2022 respectively. As a result, our business may be materially and adversely affected if we are unable to sell our decorative wall panels as expected, or if substitute products become available or gain wider market acceptance. We do not own the brand name Europrateek, which is crucial for our operations. Any failure to use, protect, and leverage our Europrateek brand could materially and adversely affect our competitive position, business, results of operations, and financial condition. Our restated consolidated financial information as at and for the 6-month period ended September 30, 2024, which includes the effect of the recent acquisitions on our financial performance and financial condition, may not be comparable to our restated consolidated financial information in respect of prior periods. Please read the section Risk Factors beginning on page 31 of the DRHP. Promoters of our company are Prateek Gunwantraj Singhvi, Jai Gunwantraj Singhvi, Prateek Gunwantraj Singhvi HUF, and Jai Gunwantraj Singhvi HUF, who together hold 67.67% of the issued, subscribed, and paid up equity share capital of our company. 12.03% of equity shares of our company are held by public shareholders. 82.65% of the company's shareholding is held by the selling shareholders, who are selling up to such number of equity shares aggregating up to 7,300 million rupees as part of the offer for sale. The board of directors of the company consists of 6 directors, 3 of which are independent directors, including 1 woman independent director. Our revenue from operations stood at 1,361.42 million rupees and 2,216.98 million rupees for the 6-month period ended September 30, 2024 and FY 2024 respectively, with an EBITDA margin of approximately 45.94% and 40.15% in the 6-month period ended September 30, 2024 and in FY 2024 respectively. We registered a PAT of approximately 434.07 million rupees and 629.07 million rupees, reflecting a PAT margin of approximately 30.16% and 27.34% in the 6-month period ended September 30, 2024 and in FY 2024 respectively. Investors are advised to read the DRHP, including the sections Basis for Offer Price, Our Business, and Management's Discussion and Analysis of Financial Condition and Results of Operations, beginning on pages 106, 176, and 341 respectively, for further information on financials and related information of our company. There are outstanding legal proceedings involving the company, promoters, subsidiaries, and the directors. Any adverse outcome in such legal proceedings may affect our business, results of operations, and financial condition. Please read outstanding litigations and material developments, beginning on page 383 of the DRHP. The objects of the offer are to carry out the offer for sale of up to equity shares of face value of 1 rupee each by the selling shareholders, aggregating up to 7,300 million rupees, and achieve the benefits of listing the equity shares on the stock exchanges. For further details of the offer, see the offer and objects of the offer, beginning on page 72 and 103 respectively of the DRHP. Our company will not receive any proceeds from the offer. The offer proceeds, and all the offer proceeds will be received by the selling shareholders after deduction of offer-related expenses and relevant taxes thereon to be borne by the selling shareholders. IPO will be conducted through book building process in accordance with Regulation 6(1) of the SEBI ICDR regulations, with allotment of not more than 50% of the net offer on a proportionate basis to QIBs, not less than 15% of the net offer to non-institutional bidders, and not more than 35% of the net offer to retail individual bidders. The equity shares will be listed on the BSE and NSE. Axis Capital Limited and DAM Capital Advisors Limited are the book running lead managers. Investments in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the offer unless they can afford to take the risk of losing their entire investment. Please read the draft red herring prospectus dated January 20, 2025 and any corrigendum or addendums thereto. None of the company or the selling shareholders are seeking an investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase or subscribe to the equity shares of the company. Potential investors should wait for the red herring prospectus to be filed in relation to the offer for making any investment decision.